Welcome back. It's time now for Past Picks. We'll go back in time to February the 7th, 2024. So not quite a year ago, but 11 months ago. Adobe was a top pick with Gordon Reid on that day when he visited with us. There you see the numbers, down 32% over that period of time. And I believe you sold out of this one at some point over the past year or so, correct?
Yeah, we did, Paul. Fortunately, we sold in August, late August of 2024 at $575 a share. What we saw was the exuberance of AI that had built up in Adobe. And they were one of the first software companies that really felt that exuberance. Quickly turned into disappointment because they didn't instantly gratify the holders of the exuberance, and
right.
The stock turned on people, and we kind of saw that developing, and obviously didn't like it. Didn't necessarily agree with it, but we were faced with the reality, and so we decided to make a pretty quick exit, and we sold it. I continue to look at it. I think there are probably other software companies that I would probably move to before I moved back into Adobe, but it's still a very good company. I just think that there are increased risks with their core their core business, and we would be somewhat hesitant.
Okay. Number two on that day, about 11 months ago, Lennar Corporation, one of the big home builders in the U.S. Mm-hmm. There you see the numbers here, down 12%.
And this is one we continue to own. And the last month has been brutal for the U.S. home builders, primarily because as interest rates start to drift lower, there's very clear evidence that they're not going to go as low or as fast downward as the market first thought. And they're punishing interest-sensitive type holdings, and the home builders are amongst them. In concert with that, mortgages, 30-year mortgages, are actually rising. So as short-term rates drop, long-term mortgages go up, steepening the curve, which is somewhat negative for home builders, but not totally negative. And the reason it's not totally negative is that higher mortgage rates in the United States lock in existing homeowners, so the resale market really dries up. So inventory levels are very, very low, because if you have say a 3% mortgage in the United States, a 3% 30-year mortgage, and there are many, many of those because you can refinance
right.
with very little cost, you don't want to get out of that because it's going to raise your monthly rate. So you're sort of stuck in your home, which forces buyers to the home builders. So I don't think it's all bad. And in fact, I'm looking very carefully and closely at increasing our holdings of the home builders on this pullback. I think it's a good opportunity. I think it's a bit of a knee-jerk reaction by the market, and I'm looking at it closely.
Okay. Let's go to number three on this day. Here we'll see a big gain in value over that period of time. U.S. Food Holdings Corporation. There you see the numbers, total return plus 47%.
Yeah, we continue to like this company. If you do peer group analysis, the biggest competitor is Cisco, the SYSCO company, a food distribution company. And in our opinion, U.S. Foods, beats them hands down. Not as much as a year ago, because 47% will take a bit of a chunk out of your competitive advantage on a fundamental analytical basis. But still, they're more profitable, their growth rates are better. What suffered a little bit in Cisco versus U.S. Foods is that a year ago I was able to say that U.S. Foods traded at a discount on a multiple basis, price to earnings, to Cisco. That's not the case anymore. But it's not extreme. They traded about a market multiple, yet they're growing mid-teens per year and expected to do that over the next few years. So we continue to like U.S. Foods.
Okay, those are the past picks from about 11 months ago when Gordon visited with us. Adobe, Lennar, U.S. Food Holdings, total return about break even over that period of time. We will be back with Gordon Reid after this, and he'll continue taking your questions on U.S. stocks.